Why are small businesses all about managing cash flow? Without it, you don't live. They say cash is king. Well, cash flow is queen, and you can't live without cash flow. Yeah, with us queens. So that means you can't buy gas, you can't buy food. If you don't have cash flow coming in to buy the things that you are needing to have reoccurring purchases on, food, gas, electric bill, phone bill, all those things, you're not going to make it. And your business, I always say, why get out of bed for less than $1 million company? I don't want you to get out of bed for less than $1 million. $1 million company produces $83,333.33 a month. You break that down, it's about $4,160 a day. So I want you thinking, what kind of product or service are you going to provide that provides that kind of cash flow into your company? Now we're going to talk about why even people that are profitable, why they fail. That's critical for you to know. Number two, how cash flow really works inside a company and the systems that you want to set up. And last, what you should be doing to stay in control and in front of it instead of just abdicating your responsibility. So many of you business owners, you're non-finance oriented and you just say, oh, my bookkeeper, my accountant, my lawyer are handling it. That's what I know. You have no idea what you're doing by using those phrases. Let's talk about small businesses and managing cash flow. I'm going to give you a definition. Small businesses are about managing cash flow because it's what keeps the doors open, bills paid, etc. That's obvious. In The Millionaire Maker, all right, in the Cash Machine books, I'm going to give you the first 3 chapters of the Cash Machine. I teach cash flow is queen, profit is theory, cash is reality. So a business can show a profit on paper, still go bankrupt because the timing of the money isn't in time to match when the money's got to go out. So why profitable businesses fail is exactly that. You're spending before you realize any revenue. You're overexpanding too quickly, and you think contracts are going to come in, and you don't realize that AR sometimes becomes nothing and non-collectible. You're mixing money. This is a big one. You're commingling because you're still a sole proprietor. So there's the business money, and then there's your money. And when you don't have money, you go back to personally paying the bill versus keeping a deduction and the business paying the bill. So you're commingled everywhere. And that alone could trigger an IRS audit, which one is going to wipe out you and the company. The owner that reinvests everything, I think, is a very risky model. So in the beginning, I get it. You're going to need to reinvest. But at some point, you've got to start pulling off profits to go buy new assets, not pay down debt, not buy a lifestyle. Your company's job is to produce not only enough profit and cash flow to manage the company and its needs, it's also to give you, the owner, additional revenue, money to go buy new assets, go buy a piece of real estate, go buy a gas and oil well, go buy something else, a laundromat, go buy another asset that produces additional income. So you're not just in one source of income. A big example that we see is companies that can make, say, $100,000, $200,000, $300,000, but if the clients pay late or don't pay before you offer services, which is a big mistake for beginning business owners, they'll deliver services or even a product and not have any of the money or even a contract on the money. So non-deliverable cash, and without a contract, you're not going to collect it. There's not a merchant processor that I know that's going to support you of $1,000 or more product or service without a contract. So contracts are critical to secure your cash flow. There's a lot of cash flow needs that's about the timing. So it's when the money goes out and the money goes in. So what we use is a weekly cash flow indicator. So we're literally, what are the bills each week? You don't pay them 1st and 15th. That's an old personal finance model. You pay once a week in a company. So you keep cash flow strong. So the money that comes in, you have the bills that are necessary that week. And here's the thing I'm going to tell you about a lot of bills. A lot of bills, lawyers hate it when I tell them that, but lawyers can be negotiated down to payment plans. You don't have to pay all of the bill. You can negotiate payment plans if you're having a rough sales month. But your job as the owner needs to be managing, is there enough marketing leads coming in? Is there enough sales to actually cover the weekly expense and then make it a weekly cash flow model? And same with credit cards. Like, don't pay your credit cards all at the same time. Stagger them throughout the month. It increases and boosts your personal credit as well as your corporate credit. So many of you just pay bills, or you don't even pay the bills. You don't even have the accounting and bookkeeping cash flow in the house. You run off a bank statement. And don't think that banks are perfect about reconciling your account. It's not their job, number one. And there are mistakes all the time inside banking systems. So you want to take that and put it in a QuickBooks, Xero, some sort of a software where you are in charge. The amount of embezzlement and scams that is around all of this online automation in the finance and the fintech, which is financial technology spaces, it's huge. Now, if this is interesting to you, I want you to lean in. I want you to get a gap analysis from our team. I want you to get a one-on-one appointment with our team. Where are you? What do you want? How can we help you understand cash flow? Is my favorite thing to teach, right up there next to sales, because sales produces cash flow. And talk to our team. Also, while you're here, I want you to subscribe to this channel, click the notification button. So whatever device you're on, every morning you're getting an indication that says, listen to Loral's video. So you're going to watch me every day and start sharing this with a lot of other people. They need to understand this. Most business owners have no finance knowledge. They're just trying to run a company because, like Michael Gerber said in The E-Myth, right? The greatest pie maker went out to her own pie shop. She knew how to make pie. She had no idea how to run the company. And that's most of you. You don't know how to be the entrepreneur that runs for cash flow. So last thing I want to talk about is, what do you need to do to stay in control of it? I would open up an operating account, and I would have a few sub accounts, whether it's a payroll account, whether it is capital account, if you got to go buy, more expenditures, whether it's more equipment, products. I mean, depends on what you're doing. And then I would open another one, which is your own pay yourself first account. And do not take it out into your personal bank account. It's a tax consequence. So we manage our money very, very strategically. We manage weekly through spreadsheets and key indicators of what bills have to be paid. We negotiate payments that are appropriate. We forecast a minimum of 90 days ahead. And that also sets up a better tax plan. So if you're not managing and watching the cash flow that's coming in, how you're making it, how you're spending it, what company is that expenditure getting deductions from, you're not probably even organized around your tax plan. And so many of you business owners, you love overpaying tax because you won't lean in and learn. You won't even lean in and give our office a call. So I'm telling you, we can totally affect your tax strategy, your understanding of finance as a non-finance business owner. If you're a chiropractor, a doctor, a lawyer, you haven't been trained on how to be an entrepreneur and run marketing, sales, and cash flow. We're here to help answer all those questions. I need you to go to askloral.com, ASKLORAL, ask questions, make a request. We'll be back tomorrow.